Look, I need to show you something that's happening right now in the silver market that most people are completely missing. And if you're sitting there thinking silver is just gold's cheaper cousin, you're about to discover why that thinking could cost you everything. Because what's unfolding in silver right now isn't just another commodity rally. This is a structural shift that happens maybe once in a generation. And the people who understand what's really going on, they're not talking about it, they're buying. Let me paint you a picture of what just happened. Silver hit an all-time record high, not just a multi-year high, not just breaking through resistance, an all-time record, the highest price silver has ever reached in human history. And here's what makes this absolutely fascinating. It's not doing what everyone expected. See, traditionally, silver moves with gold. They're both precious metals. They're both safe havens. When gold goes up, silver follows. When gold corrects, silver gets hammered twice as hard. That's been the pattern for decades, except right now, that pattern is breaking down in the most spectacular way possible. Silver is outperforming gold by margins we haven't seen in 18 months. The silver-to-gold ratio, which tells you how many ounces of silver it takes to buy 1 ounce of gold, is compressing rapidly. And when that ratio compresses, it means silver is gaining strength independent of gold. It means something else is driving this market. So what's really happening here? Why is silver suddenly acting like it has a mind of its own? The answer is actually pretty simple, but the implications are massive. Silver is caught in what traders call a supply squeeze, and this isn't some temporary shortage that gets resolved in a few weeks. This is a structural deficit that's been building for 5 consecutive years. Think about that for a second. 5 years in a row where global demand for silver has exceeded global supply. 5 years of drawing down inventories. 5 years of depleting stockpiles. And now, those stockpiles are running critically low. Here's where it gets interesting. The Silver Institute just released their forecast, and they're projecting global silver demand will hit over 1 billion ounces. But here's the problem. Mine production can't keep up, not even close. The gap between what the world needs and what miners can produce is widening every single year. And unlike gold, which is primarily an investment in jewelry metal, silver has this unique characteristic that makes this shortage absolutely critical. Silver is consumed. It's used up. It doesn't come back. When you buy a gold ring, that gold still exists. It can be melted down and recycled. But when silver goes into a solar panel, into an electric vehicle, into a smartphone, into medical equipment, it's gone. It's dispersed in such small quantities across so many products that it's economically impossible to recover. So every year, billions of ounces of silver are permanently removed from the available supply, and every year, industrial demand keeps growing. And every year, miners struggle to find new deposits that are economically viable to extract. Now, let me tell you about what's happening in India, because this is where the story gets really fascinating. India has suddenly emerged as a massive buyer of silver, not just for jewelry and traditional uses. We're talking about investment demand that's absolutely exploding. Indian buyers are looking at their currency, looking at inflation, looking at global instability, and they're making a calculated decision. They're converting their savings into physical silver at a pace that's catching everyone off guard. And when you have a country of over 1 billion people deciding that silver is their preferred store of value, that creates demand pressure that simply cannot be ignored. But here's what most analysts are missing. This isn't just about India. This is about a fundamental shift in how the world views silver as an asset class. For decades, silver was seen as the poor man's gold. It was what you bought if you couldn't afford gold. It was the backup plan, the second choice. But something has changed in the psychology of investors worldwide. People are starting to understand that silver might actually be the better play. Not because it's cheaper, but because the supply-demand fundamentals are so much more compelling. Think about it this way. Gold has thousands of years of above-ground supply sitting in vaults. Central banks hold massive gold reserves. There's a deep, liquid market with enormous stockpiles that can absorb demand shocks. Silver? The above-ground inventories are a fraction of what they used to be. The strategic stockpiles that governments held during the Cold War? Sold off decades ago. The silver that used to be in photography? Gone, consumed by the digital revolution. The silver that was in old electronics? Mostly unrecovered, sitting in landfills. What we're left with is a market where available supply is incredibly tight, industrial demand is accelerating, and investment demand is just starting to wake up to the opportunity. And here's the kicker. The price of silver is still historically cheap relative to gold. Even after hitting all-time highs, even after this massive rally, silver is still trading at ratios that suggest it's undervalued by historical standards. Let me give you some context. Back in 1980, during the Hunt brothers' silver squeeze, the silver-to-gold ratio got down to around 17 to 1. That means it took 17 ounces of silver to buy 1 ounce of gold. Even in 2011, during the last major precious metals bull market, that ratio got down to the low 30s. Right now, we're still in a range that's well above those historical lows, which means if silver is going to revert to its historical relationship with gold, there's still substantial upside from current levels. And that's before we even factor in the supply deficit. Now, I want to talk about what's happening in the industrial sector, because this is where the story becomes absolutely critical for understanding where silver is headed. The green energy transition that governments around the world are pushing, this is massively silver intensive. Solar panels use silver, lots of it. Every single solar panel requires silver for the conductive pathways that allow electricity to flow. And as solar installations accelerate globally, that's creating demand for silver that simply didn't exist a decade ago. Electric vehicles? Same story. EVs use significantly more silver than traditional internal combustion vehicles. The electrical systems, the battery management systems, the charging infrastructure, all of it requires silver. 5G networks that are being built out across the world? Silver. Medical devices and antibacterial applications? Silver. Water purification systems? Silver. We're talking about a metal that has become absolutely essential to modern technology and the future economy. And unlike other industrial metals where substitutes exist, silver's unique properties, its electrical conductivity, its thermal conductivity, its antibacterial properties, make it irreplaceable in many applications. So you've got this perfect storm developing. Industrial demand that's structural and growing, investment demand that's accelerating, mine supply that's stagnant or declining, and inventories that are at critically low levels. What happens when an essential commodity faces that kind of supply-demand imbalance? The price has to rise. It's not a matter of if, it's a matter of how much and how fast. And here's what the smart money is doing right now. They're not waiting for confirmation. They're not waiting for silver to break through some arbitrary price level. They're accumulating physical silver while it's still available at these prices. Because here's what most people don't understand about silver. When a real shortage hits, when industrial users start competing with investors for available supply, the price doesn't move in an orderly fashion. It gaps. It spikes. It becomes volatile in ways that create opportunities for those who positioned early and problems for those who waited. We saw this play out in other commodities. We saw it in palladium a few years ago when automotive demand collided with supply constraints. The price didn't gradually rise. It exploded, catching most investors completely off guard. Silver has the potential to do the same thing, except the scale is much larger. The number of industries dependent on silver is much broader, and the investment community that could pile into silver if this story goes mainstream is enormous. Think about what happens if just a small percentage of the money sitting in gold ETFs decides to rotate into silver. Think about what happens if pension funds and institutional investors start viewing silver as a strategic commodity they need exposure to. Think about what happens if retail investors around the world decide that silver is their hedge against currency debasement and inflation. The available supply of investment-grade silver, coins, bars, ETF inventory, is tiny compared to the potential demand. We're talking about a market that could be overwhelmed by a relatively small shift in investor sentiment. And that shift is already starting. You can see it in the price action. You can see it in the premiums on physical silver. You can see it in the delivery demands on the futures exchanges. You can see it in the buying patterns from India and other emerging markets. Now let me address something important here, because I know some of you are thinking about your retirement accounts and wondering how this fits into your overall wealth protection strategy. If you're sitting on $100,000 or more in traditional retirement accounts, IRAs, 401ks, there's actually a way to get exposure to physical precious metals within those accounts without triggering taxes or penalties. I put together a comprehensive guide on how gold and silver IRAs work. It's completely free, and you'll find it in the description below. It covers the mechanics, the rules, the custodians, everything you need to know if you're considering adding physical metals to your retirement portfolio. Worth checking out if that's relevant to your situation. But let's get back to what's happening in the silver market right now, because there's another dimension to this story that's absolutely critical. The paper silver market, the futures contracts, the derivatives, the ETFs, is enormous compared to the physical market. For every ounce of physical silver that actually exists and is available for delivery, There are multiple claims on that silver in the paper market. This works fine as long as everyone's content to trade paper claims and nobody asks for physical delivery. But what happens when that changes? What happens when industrial users need physical silver and can't wait for mine production? What happens when investors lose faith in paper claims and demand the real thing? You get what's called a squeeze. And in a market as tight as silver, a squeeze can send prices to levels that seem absurd until you understand the mechanics of what's happening. We've seen mini squeezes before. We saw one recently when retail investors coordinated buying of silver ETFs and physical silver simultaneously. The price spiked, premiums on physical silver exploded, and dealers ran out of inventory. And that was just a taste of what's possible. Imagine what happens if that kind of buying pressure sustains for months instead of weeks. Imagine what happens if it's not just retail investors, but industrial users competing for supply. Imagine what happens if central banks, which have been accumulating gold, decide they need silver reserves too. The potential for a price move that catches everyone off guard is very real. And the people who understand this aren't broadcasting it. They're quietly accumulating positions while silver is still available at prices that will look cheap in hindsight. Now, let's talk about the geopolitical dimension, because this is where silver's role as a crisis hedge becomes really important. We're living in a world where currency instability is becoming the norm, not the exception. Central banks are trapped. They can't raise interest rates enough to truly fight inflation without crashing their economies. They can't keep rates low without destroying the purchasing power of their currencies. They're stuck. And when currencies lose credibility, people look for alternatives. Gold has always been that alternative. But silver, with its dual role as both a monetary metal and an industrial commodity, offers something unique. If you believe the global economy is going to keep growing, silver benefits from industrial demand. If you believe we're heading into a crisis where currencies lose value, silver benefits as a monetary hedge. It's one of the few assets that wins in both scenarios. That's why you're seeing this surge in investment demand. People are recognizing that silver isn't just a speculation. It's insurance. It's a hedge against multiple different types of risk. And in a world that feels increasingly unstable, that kind of optionality is valuable. The BRICS nations, Brazil, Russia, India, China, South Africa, are actively working to reduce their dependence on the dollar. They're settling trade in their own currencies. They're accumulating gold. And increasingly, they're looking at silver as a strategic resource. China, in particular, has been a massive accumulator of silver. Not just for industrial use, though their manufacturing sector consumes enormous quantities, but as a strategic reserve, as a hedge against dollar dominance, as a resource they believe will be critical for their technological and economic future. When you have the world's largest manufacturing economy stockpiling a commodity, that tells you something about where they think the value is going. And it's not just China. Countries around the world are recognizing that silver is more than just a metal. It's a strategic asset. It's a store of value. It's a hedge against the monetary experiments that central banks are running. This is why the current price action in silver is so significant. This isn't just a technical breakout. This is the beginning of a fundamental revaluation of what silver is worth in a world where supply is constrained, demand is accelerating, and monetary stability is questionable. Let me give you a historical parallel that might help put this in perspective. Back in the 1970s, silver was trading around $2 an ounce. Most people viewed it as an industrial metal with some monetary history. Nothing special. Then inflation hit. The dollar lost credibility. The Hunt brothers started accumulating, industrial demand was growing, and suddenly, silver went from $2 to $50 in less than a decade. A 25x move that created generational wealth for those who positioned early. Now, I'm not saying we're going to see a 25x move from current levels. The market is different. The world is different. But the fundamental dynamics, currency instability, supply constraints, growing demand, those are eerily similar. And here's what's actually more compelling about today's setup. In the 1970s, the industrial demand for silver was a fraction of what it is now. The technological applications were limited. The green energy transition didn't exist. Electric vehicles weren't a thing. Today, silver is embedded in the infrastructure of the modern economy in ways that make it far more critical than it was 50 years ago. Which means the potential for a sustained bull market, rather than just a speculative spike, is much higher. The question isn't whether silver is going higher. The supply-demand fundamentals make that almost inevitable. The question is how much higher and how fast. And that depends on a lot of factors. It depends on how quickly industrial demand grows. It depends on whether investment demand accelerates. It depends on whether we see disruptions in mine supply. It depends on whether the paper market faces a delivery squeeze. But here's what we know for certain. Silver is in a structural deficit. Inventories are declining. Industrial demand is growing. Investment demand is awakening. And the price is still, by historical standards, relatively cheap. For those who understand what's happening, this is an opportunity to position in an asset that has the potential to significantly outperform in the coming years. Not because of speculation, not because of hype, but because of fundamental supply and demand. The smart money isn't waiting for confirmation. They're not waiting for silver to hit some arbitrary price target. They're accumulating now, while the story is still under the radar, while physical supply is still available, while prices haven't fully reflected the reality of the supply deficit. Because once this story goes mainstream, once the investment community fully wakes up to what's happening in silver, the opportunity to buy at these levels will be gone. The premiums on physical silver will explode, the availability will dry up, and the price will be substantially higher. This is one of those moments where understanding what's really happening gives you an edge, where seeing the structural shift before the crowd gives you the opportunity to position advantageously. Silver isn't just another commodity having a good year. This is a fundamental repricing of an asset that's been undervalued for decades, an asset that's becoming increasingly critical to the global economy, an asset that's in a supply deficit that's only getting worse. Your crisis fund, your hedge against instability, your protection against currency debasement, it might be time to reconsider what that looks like. Because silver, right now, offers something that very few assets can match. It offers exposure to industrial growth and monetary protection simultaneously. The people who positioned in silver early in the 1970s before the big move, they didn't just make money. They preserved and grew their wealth during a period when most assets were getting destroyed by inflation. They understood that silver wasn't just a trade. It was a strategic position. We might be at a similar inflection point right now. The signs are all there. The supply deficit, the growing demand, the monetary instability, the geopolitical shifts, the technological transformation that's making silver indispensable. The question is whether you're going to recognize this opportunity while it's still available, or whether you're going to wait until everyone else figures it out and the easy money has already been made. Because that's how these cycles work. The big moves happen when nobody's paying attention, when the fundamentals are building but the crowd hasn't noticed yet, when the smart money is accumulating and the retail investors are still focused on whatever's trending. Silver is setting up for something significant. The all-time highs we're seeing now might just be the beginning. The supply squeeze is real. The demand is accelerating, and the price is still, relative to where it could go, at levels that will look like a gift in hindsight. This is your moment to decide. Do you understand what's happening? Do you see the opportunity? And are you going to position yourself accordingly? Because the crisis fund you thought you had, the cash, the bonds, the traditional safe havens, they might not protect you the way you think they will. Not in a world where currencies are losing purchasing power, where inflation is persistent, where geopolitical instability is the norm. Silver offers something different, something tangible, something with real supply constraints and real demand growth, something that's been money for thousands of years and is simultaneously critical to the technology of tomorrow. The ultimate crisis fund might have just changed, and the people who recognize that early are going to be the ones who benefit most from what's coming next in the silver market.